Hi everyone. In the previous video, we talked about the 6 general stages of AI supply chain. We covered the first 3 stages: rare earths, semiconductors, and servers and hardware. Today, we're covering the last 3. Are you ready? If you haven't seen the previous video, click on the link in the description section. So let's get started. In layer 4, we have data centers and one supercritical element. It is power supply. One large AI cluster equals power demand of a medium-sized city. Everyone is focused on the shiny new AI chip, but AI doesn't run on vibes. It runs on electricity. Massive, terrifying amounts of it. Did you know that a single ChatGPT query uses 10 times more power than a Google search? OpenAI is said to have signed long-term contracts worth 36 gigawatts of computing power. You know how much capacity they are estimated to be at now? Less than 2 gigawatts. So they'll have to grow by about 20 times to get to 36. And there is a rumor that their internal ambition is to get to 250 gigawatts by 2033. That's more than 125 times. To put things in perspective, let's look at how much 1 gigawatt of capacity can power in the real world. According to some estimates, 1 gigawatt of capacity can power a large US city of about 750,000 households for a whole year. 750,000 is in between number 4 city Houston and number 5 city Phoenix. And guess what? In terms of investment required, it's estimated that to build 1 gigawatt of compute power, you need $50 billion. Did they say 36 gigawatts? 250 gigawatts? I mean, we are really talking about a massive number. And this is just from OpenAI, just one of 5 major players just in the US. Data centers now account for 3% of US electricity demand and growing. Even if the ambitious plans don't materialize, we are looking at a steep growth for a long time. So, bringing thoughts down to the stocks, we follow the CapEx, and right now the money is flowing into electricity infrastructure. Training these large language models is the digital equivalent of trying to boil the ocean with a toaster. They are stunningly power hungry. This brings us to the most unsexy yet most critical trade: power equipment. While Silicon Valley is busy generating tokens, the emerging market industrial players are selling the literal pipes, transformers, and switchgear needed to keep the lights on. And now the wait times for transformers and electrical equipment are 3 to 6 years. Companies with production capacity locked in are basically printing money. Hyundai Electric in Korea has become a celebrity in the transformer world. Yes, transformers, the least glamorous but most profitable thing in heavy industry right now. It is up whopping 1,733% since ChatGPT was first launched. Even better than Asia Vital from the previous video, almost twice better than Nvidia, and way better than the Magnificent 7 stocks. It's trading at 19 to 20 times next year's earnings, with order backlog now longer than a Korean drama season. Their backlogs are measured in years. When a hyperscaler announces a new mega campus, these guys are getting the call. It's the AI trade, but with the gritty, reliable profit margins of a foundational industrial business. It's not glamorous, but remember, glamour doesn't pay dividends. LS Electric in Korea, Delta Thailand in Thailand, and WEG in Brazil, whose stock has other issues going on, are all at full capacity, 70 to 90 week lead times. Customers are sending edible arrangements to sales reps. The best performing AI subsector of last 3 years, perhaps, is here and is literally companies that make very large metal boxes full of copper. Let's move on to software that sits on top of everything we've discussed so far. This is where the AI models actually get trained and live. China now owns the top open weight frontier models globally. If you look at the latest intelligence ranking by artificial analysis, the US models still hold the absolute top closed models, led by the latest Gemini 3 model. But ever since the time DeepSeek entered the picture, the gap with the Chinese models has been narrowing. The Kimi K2 model in the 4th place It's by a private company called Moonshot in China, invested by Alibaba. DeepSeek is number 5. Qwen 3 model by Alibaba is number 10. Did you know that the Chinese companies like DeepSeek, Alibaba, Tencent, Moonshot, Baidu, ByteDance, and Huawei together released more frontier models in 2025 than the rest of the world put together? This is one interesting chart to consider if you want to nerd out a bit. Do you remember when the media circulated that DeepSeek only spent $6 million for its model? That was nonsense and not an apples to apples comparison. This graph is a better way to see the comparison. Higher you go on this graph, the smarter the model is. More right you go, more expensive. So in terms of cost efficiency of the model, DeepSeek and Kimi do stand out. You can argue that the US players are currently in a race and prioritizing pushing themselves higher in this graph over optimizing cost to move to the left. We are still early in this race. So we will see. But the point is that the Chinese are competitive at this point, and there are really no other competitive players in the world outside of the two countries. Now bringing things down to the stocks, the famous DeepSeek, Moonshot, Huawei, and ByteDance, who owns TikTok, are all private companies, but Alibaba trades at 13 times 2026 earnings, while its Qwen model keeps parking itself in the global top 10. Tencent trades at 16 times while becoming the default enterprise AI stack for half of Asia. Baidu at 14 times has Ernie and also leads autonomous driving efforts in China. Now, why are they so cheap? Well, the China risk, regulatory risk, geopolitical risk, all the risks. And unfortunately, these risks have been playing out. But they're also leaders in AI-powered e-commerce, cloud computing, and fintech. If you can stomach the political uncertainty, valuations can be interesting. A few other models in EM worth a mention are Naver in Korea, who runs HyperClova X, TII in UAE, who runs Falcons, and Humane in Saudi Arabia, who has Alam. These models are focused on local languages and catered to local users. Finally, the last layer. We look at some companies who use the models in the real world. First, IT outsourcers who help develop and launch AI applications at their enterprise client sites have had a mixed benefit, as you can see in the stock prices. They are indeed winning projects and executing many AI deployment projects, yet are faced with the market perspective that they are AI losers. Many think IT services are the labor-intensive middlemen who risk being disrupted by the very technology they are selling. The fear is perhaps validated by McKinsey's 2023 estimation that 30% of work could be automated by 2030, which seems to have gone up to 57% in its latest report just last month. Perhaps the overall pie might grow, but the investors seem to be concerned about IT services companies. Okay, so outside of the IT outsourcers who are struggling, the real value from AI seems to be more easily captured in vertical applications. These companies are already printing money by applying the technology. And many would argue we are just at the tip of the iceberg in capturing value in this layer. Nubank, or New Holdings in Latin America, is one of the largest digital banks with over 120 million customers, built entirely on AI underwriting. Inter, or Banco Inter, is in a similar business as Nubank. Sea Limited in Southeast Asia runs super apps for 600 million plus people. Meli is the Amazon-like e-commerce giant in Latin America. Grab, which is based in Southeast Asia, has a super app of ride-hailing, food delivery, and digital payments. And guess what? These stocks are all listed in the US. At this point, you must be thinking, what about India? Anything happening there? Well, a great question. In fact, a lot is happening in India. India has a 77% AI workplace adoption rate compared to 59% in the US, 54% in Germany, and 47% in France, and is repeatedly mentioned by research firms as the Asian or global front runner in AI adoption. Why? fewer legacy systems, massive mobile penetration, cheap data, and urgent problems that need solving. Think about how much agriculture AI, healthcare diagnostics, and AI fintech can make real and quick impact on the ground there. The challenge for public market investors? Most companies are private or part of larger conglomerates, but the investment is happening, adoption is quick, and things are growing fast in India. It's probably worth watching them closely. EM is everywhere in the AI supply chain, just not always on the magazine covers. So here is what we know. The companies that control the atoms, watts, clouds, and actual users of AI are mostly emerging market listed. Here are some highlight stocks for the 6 supply chain layers. Not too shabby. TSMC makes 90% plus of advanced chips, and Hynix and Samsung make 75% plus of memory chips. Power equipment companies have multi-year backlogs with 3 to 6 years of wait times. Some commodities face structural supply deficits but volatile. Emerging markets are building AI infrastructure at breakneck speed. Adoption rates in places like India and Brazil are outpacing the developed world. Well, there you have it, a highlight of top AI stocks in emerging markets. Thank you for watching, and like and subscribe for more weekly videos to come soon. Drop your comments and let's keep questioning and learning.